All right. This is the 4 hour. 4 hour, we're definitely at the very top of a market maker buy model coming up at all-time highs up here. We've come up, we have this rejection block up there. We have this, we had a BISI here and we've made it bearish. We've closed above it, closed below it. So it's currently a reclaimed SIBI here. We also have this bearish breaker. It's a little easier to see that on the 1 hour. We have a low and a high, a lower, we had a high and a low, and a higher high and a lower low. So that would make that, that's even on the 15-minute. I think that's the basis, all 1 hour, right? We had a high and a low and a higher high and a lower low, came back up, and we've been chopping around inside the breaker here. Interesting here. We're going to, 1 minute there. We also have this inversion on the 15-minute there. Let's go back to the 60-minute first. Okay, so what we have here on the 60-minute, we have this high short of the all-time high by about 25 points, lower high, lower low, which we just put in right now on the 9 o'clock hour, which we have another 14 minutes, 13 and a half minutes to this current hour. Let's see here. We have these bearish inversions here, right? 1 hour BISIs that we closed below and then tested and respected. So it certainly seems to me that currently on the 1 hour, we are in bearish price delivery. So will that mean we're going to come back down here? We'll see. Let's look at the 15-minute. Also, we have this lower wick on the 15-minute candle, which we've came up and respected, right? We respected the SIBI over here. Say this is protected high. Is this a protected high? Um, excuse me. Let's analyze this. Let's go down to the 5-minute and oops. Let's replace this. That over there. Let's go down to the 1 minute. I think that on the 1 hour and below, we're definitely in bearish price delivery. But let's see if do we have what we're looking for on the lower time frame. So if the higher time frame is bearish price delivery, then and the drawn liquidity would be the low that we just made upon open. Sell side liquidity down there. If that's the case, the point of interest from which then that according to that theory, this is a low time frame market maker sell model that's developing from point of interest, which would probably rather see it above these highs. Probably. Let's see. I'd rather see. Oh, interesting. Okay, we are also below the midnight opening price last night. And I'm not, let's see. All right, let's take this off. It's not completely clear. I mean, it's definitely good argument for that we are, that we're likely to go up here, right? We have all these smooth, relatively equal highs up there. We've got yesterday's high, we've got Monday's high, we've got all-time highs. All right, we have this Um, I'm going to say we've got this. Where is that? Here we go. Bearish rejection block, 1 hour. Going to turn that off just again to neaten things up. Put these in order so that when we're there, it can be relevant. We're at 25,258, 25,300. That's a steady. Okay. All right. We still have this bearish breaker, which we had a high and a low, and a higher high and a lower low, and then we've respected it a couple of times. It sent us lower. I'm trying to see which direction order flow is most likely. I mean, it's a little hard to argue that we have this um, kind of reversal candle right here that we're going lower. So those are this is my entry criteria here. So institutional order flow, which is not mine. I got this from Jamie, from Zusi's World. IOF, institutional order flow, is starting to look more and more like it is bullish. Drawn liquidity would be Tuesday high, Monday high, and all-time highs. All right, point of interest would be this 1 hour BISI, which we came down upon open. We took out liquidity below here and then retraced. Change in state of delivery. Let's go down to the 1 minute. And all right, so 1 minute. Well, we definitely have bullish change in the state of delivery here, right? We've closed above the SIBI here. We've inverted the SIBI. We've closed above this open of this leg down. Let me remove some of this. All right. 5 minute. Okay, so I'd like to see if we close above this previously bearish protected high. If we close above that on the 5 minute, then I'm going to look for a setup to take us to previous day's highs, which can give us, let's say, probably, 50 to 100 points, which would be nice. We have, this is another 15-minute breaker. This is a 1 hour breaker on 15 minutes. What do we have? Let's go to the 15 minute. Let's all right, clean things up here with time frames. So this is our inversion 15-minute that is, we've respected 15-minute breaker. We had a high and a low and a higher high and a lower low. And this is that lower candle, the bottom candle in that range there. We also have this SIBI right there. Bullish inversion on the 1 hour. I'm going to again remove some of these things just because it's too crowded on the lower time frames. Let's go back to 5 minute. We closed above. Wonder if we're going to close on the 15 minute. See, we closed above and we wick down. So either we're going to continue lower now, respecting, let's say, that high, um, or we're setting up to go higher. So I'm going to watch the 5 minute on the right for now. And let's pull in, pull in the, on the 1 minute. So actually, we look on the 15 second. I'm looking for signs of, I'm looking for a change in the state of delivery, or rather, no, signs of continuation, right? Meaning right now we're retracing, but I want to see that we're respecting the change in the state of delivery, right? Let's say we're on the 1 minute now. On the 1 minute, we have this bullish inversion. Okay. I'd like to see that we have some kind of SMT, bullish SMT here as well, to confirm that we're going higher, to confirm that we've taken out this previous protected high. It's no longer a protected high. And that would be a convincing change in the state of delivery here. All right, let's on the 15 second. And we do have an SMT with ES on the 30 second here. That looks kind of clean. So we got 15 second. Over here it showed up. Here we go. So NQ came lower, ES did not. Don't know why, because it doesn't show as a swing point. So this was higher than this on NQ. Now look on ES, the 51 candle is lower than the 57 candle. So there is that. Okay, let's go back and see, is this swing point being violated or respected? Let's look at the 15-minute candle. We have 42 seconds left on the second 15 minutes of trading from the open. And it is a very indecisive 15-minute candle. We are respecting this SIBI here. Right? We've respected Let's see, have we respected? I'm going to take off these wicks over there because it's nice, but it's a bit much at this point. We respected consequent encroachment of this SIBI. All right, see the body is just barely above, hardly. I'm going to put that over there for now in case I want to pull it back out. But so far, let's go back to the 5 minute here. I guess if we get a 5 minute close above this down close candle, then that would be indicate that, we are in bullish price delivery, making this in, I think that would kind of confirm this, sorry, this down close leg as a bullish order block, which we've closed above. And if that's the case, we have on the lower time frames, we have this SMT with ES. And I'll be looking to prepare to go long. Going up to all-time highs, possibly. I'm waiting to see if this 5 minute candle closes above the one right behind it, right before it. See, on the 30-second, we wicked up 3 times and came back off. So that's another sign showing that we may actually, it's another point towards bearish price delivery. That's bearish order flow. Move that off just in case it's no longer relevant. So in order for me to be convinced that we've got bullish order flow, I would want to really see a confirmation of this close above. What does the 15-minute candle look like so far? A mess. No real clarity here that I could see. Look at the 5 minute again. Another minute and a half on this current 5 minute candle. When we wick down here, right, we've got, let's see if we have anything on the 1 minute or it's just on the, it's like I'd like to see, do we have a 1 minute SMT would be nicer than 30-second, just twice as nice. So this is the 10:02 candle with the 9:48 candle. So we do have that SMT over there, right? Over here where NQ made a lower low, while ES made a higher high. That's only helpful if we're going higher. I mean, if we're going lower, we also have SMTs to indicate going lower. So still not 100% sure how to think about this, but the first thing we got to get clear is which direction is order flow. And as of right now, I don't think it's clear, at least not to me. And I'm going to go with what I was originally seeing on the higher time frames when looking at the 60-minute, thinking that we are possibly in bearish price delivery. It's a little hard to tell because we are in a range. And we did come out, take out the bottom of the range. So it is not unlikely that we'll go take out the top of the range and maybe come back down afterwards. Top of the range means new all-time highs. We've got relatively equal highs up there. Oh, that's the, just take it off the hourly for now. As you can see, we've just started the 10 o'clock hour, 10:06. This candle, let's go back to 15-minute. No, excuse me, 5-minute. All right, so we are, it looked like when this 5-minute candle closed above this leg down, which is the opening, right? This was 9:30, the 9:30 candle, and the two candles prior. It looked like we might be forming bullish order flow. After that, I'm not so sure yet. Excuse me, because we haven't had any kind of confirmation here. If anything, because we have had it's been followed by weakness on the NQ and ES made a lower high, that's a sign of weakness, I would think. Let's get them all on the 5-minute here. My SMT tool is not the best. One of the best I've found for free, but it's not the best. Okay, so over here, this is what we're looking at on micro and MNQ, right? We have 915 on NASDAQ made a higher high at 950, but on ES 915 and then at 950 we're not even close to those relatively equal highs. See, and I think the same on, right, same thing here on YM. So both YM and ES made lower highs than prior. Combined with the fact that NQ is not looking strong, is it looking weak? It's not looking strong. Um, Again, I'm waiting to see a close above. I want to see a close above this down closed 5-minute candle as a way of confirming, and ideally it should be above this SIBI here, inverting this. That would give us, here, let's mark that off because that actually is, I think that's an important one. That would be SIBI 5-minute. That would show that we are inverting this whole leg down, right? This bearish leg down came off of this SIBI here. We close above it, above the SIBI, which we have so far respected. That would be a sign that we have, that we sign out, to me at least, that we can expect bullish price delivery. But so far, we're seeing nothing to give us that feeling. Just gonna prepare a bearish, whoops, wrong one. if this is going to be the protected high, and our target will be down there for about 85 points. Here we have a let's look at 3 minute. Might go with the this 3 minute candle closes. If we close below, I might look for to get short. Five seconds left on the 3 minute candle. And on the 1 minute, we put in this civvy here. That's a pretty big stop. $24 points. Let's go to lower time frame and see what we might see here. So we do have a bearish change in the stage delivery on the 1 minute. That's what we're looking for on lower time frames. If it's bearish price delivery, which I'm going to go with bearish because I haven't seen that violated really. So we want to see a bearish change in state delivery SMT, which we have right there. I'm going to see if we come back up. Gives us a 25-point risk. Well, drop more than that. Say 27-point risk. 72-point profit target. Let's see, this is a 1 minute bullish inversion for value gap. See if at some point we come back up before going lower. Below us, we also have the regular trading hours opening gap. So there's arguably, this would be 50% of it. Like we have not retraced. Let's go back, show you. All right, this is from 2 days ago. Monday we opened, went up, chopped around Monday and Tuesday. So it could very well be we're going to come back down and refill that in. And it could be I may not get this here because I might have missed it. All right, after the change of state delivery, we didn't really go any higher. Yeah, this little order block, which I see, okay, we went back up, I suppose, into this breaker. High, low, higher, high, lower, low, right? Then we went back up just into the, let's draw that. See, but I didn't see that at the time. But let's watch it now. See, we might come back up into the breaker again before going lower, or we might just go lower. Don't need the hourly now on low time frames. Anyway, so we have these, I've graded it here. All right, that's the low of the regular trading hours gap, and that's the high. Now, this was a SIBI reclaimed. So currently, this is actually a a bullish inversion on the hourly, and we've respected it. So we'll need to disrespect it if we're going lower. And take that off. Let's go down to 15-minute. So I'm watching to see what happens as we get closer to the, just say 1-minute breaker. We're going to go into it. So we came into consequent encroachment of the breaker. Okay. That's showing as if I got in at that point. I can move this. You see, probably wouldn't have gotten in at that point, but might have gotten in at that point. Let's see what happens. Now, what I want to see is got 39 point stop. That's really too much. Let's go back. All right. Where's a good place? All right, so definitely would have gotten in at my original point, but I'll leave that. I'm going to come to make this a little more, put it above the high of the previous 5-minute candle. Whoops, that's magnet's getting in our way. So if we're, whoop, wait, we just started a new 5-minute candle. Okay. If we're expecting bearish price delivery, then I really wouldn't want to see price come back above there. It's possible if we're having very choppy sideways price action, in which case I would be happy to get out for a $50 loss. Um, so now we have a risk of 24 points, which is $48, with a possible win of 60. So that's a 2.51 risk reward of 2.5. Let's see what happens. On these 15-second charts, we see a couple of SMTs with ES. We have also on a 5-minute. Where is this? Over there. Yeah, 5-minute. Let's go down to 1 minute. Okay, so we definitely have an SMT here. Right. YM, this candle was higher. On NQ and ES, it is lower. See here, right? So on the 9:45 to 10:17, let's find 9:45. 9:45 to 10:17. 9:45 to 10:17 and 9:45. Okay, well, there no SMT over there. Everybody's lower. What about this swing high here? 10:04. 10:04 to 10:17. Where's 10:04? Okay, there's 10:04. 10:04. So we do have an SMT between NQES and YM. Let's go back and see how we're doing here. I'm going to look at taking this lower. What if we were to take this lower here down to the high of the opening range gap? That gives us a risk reward of 4.7. I'm also going to reduce our risk, okay, because this should be a protected high. I don't want to see us come and take out that high. So we did come down to the low of the, no, sorry, this is the 930 candle, the opening low, like the move from 930 did not yet get there. We have here, if I remember correctly, this is a 4-hour inversion we've crossed multiple times in different directions. Right now we're in about 30 points profit. Bit of a retracement. So I'm just going to put this down to regular trading hours from 2 days ago. Just made it more precise. Let's look at the order flow. So looking now at what we're seeing here, we're seeing continued bearish order flow on the sub 1 hour time frames, or 1 hour and below. Let's look at the 240-minute, which is 4 hours. Yeah, I think we're seeing bearish. Let's try to leave this current candle out of the picture. It's a little less clear with the current candle out of the picture, that's for sure. And we just started a new current candle. But if, as I believe ICT has said, even a wick below the leg up would be changes to delivery, then that would qualify, I think. All right, we're only halfway through the current hourly candle. We're about at my initial take profit that I lowered down to here, almost there, right? It's this sell side liquidity. So currently this 1 hour candle is looking bearish. We need to see what happens once we take out sell side liquidity. It could very well be that we then turn around and go higher, but I'm looking to see us go lower. Ooh, there we go. I'm even going to come back down to the midpoint. Let's just say consequent encroachment of regular trading hour gap from a couple of days ago. So right now, I would basically put in a stop. I'd move my stop loss to above here. Like that would be a protected stop. This tool doesn't allow you to do that because it's measuring your risk reward, but I would take off all risk right now. So it wouldn't be a risk reward of 12. It would be basically nothing at risk. And let's also possibly, I'm going to move this down here because we may go all the way down, but I might take it off before we get there. That's the regular trading hour low gap, right? The regular trading hour gap, October 20th. That's Monday, the low. And let's see what happens. Um, let's go down to 5 minute. Let's look at 3 minute. Let's look at 1 minute to see about uh, um, on the 1 minute. How do I get that? I'm going to assume that's our protected high. Send that to the back. Okay. I would now put my stop loss. I now put my stop loss above these highs over here. And that, if we were to retrace all the way back up there, there's no chance. I mean, I don't think I would wait around for all that. We're now 109 points in profit. I'm going to turn on my, I wonder if I could still do that. Can I add my start video on this? Yep, there we go. Okay. All right. 103 going, retracing a bit. let's go back and look at this and see. Okay, so we came down to the regular trading hour, the high of the gap, and we're bouncing off of that with two wicks there. All right. Um, so I want to watch that. Like if I start to see signs of a retracement, I'm just going to take profit. I don't want to sit around for a retracement and give back too much of 100-point profit. That's good. I'm quite satisfied with that. Um, However, it does look like we're going to continue lower, and that's what I'd like to see. Now, as we get closer to, hold on, okay, this is not showing. No, that's not what I want. I want the the Fibby retracement there, showing the levels of the gap. So as we get closer to the midpoint, consequent encroachment of the regular trading hours gap, I'm going to watch for any sensitivity, or even actually now we just came to the top quadrant. So I'm just watching for any sensitivity because, again, I'm not interested in sitting through any kind of retracement higher right now. 134, 135-point profit. If I see any possibility that we're going higher, I would take my profit right there. Or I actually in a trade. So I'm watching to see if we see any signs of retracement. Like, if we start to see, close above this SIBI here. Okay, again, I'm keeping my eye on those levels because these various levels, we could end up bouncing off of any of them, especially the 50% mark over here. And again, what this is we are grading the gap between Friday's close at 4 p.m. and Monday's open at 9:30. And I'm watching that. That's what we're grading here. My hope is that we just soon flush through it all, drop. All right. We also are, let's see, looking at the hourly. So we do have, let's say, okay, it's 111 points. If this was, I, I don't know if we're going to go lower or not, but I would call this a trade. Like I would take this off. Whoops, I locked it. I think at this point, oh yeah, I'm still, all right. All right. Maybe it's good that it didn't work. Sometimes you're lucky and can't take the trade off, but if we go back up to 131 and a quarter again, I'll take it off. Anyway, this is not real trading, so let's just see where we're going. What is going on here? All right, let's just say I take it off, okay? So why is it open? Oh, it's closed. Okay. So it's giving me a closed, right? It was a 113-point move. That's $2 every point. So that's a really nice, very nice move. Nice profit. And it looks like we're probably going to retrace, and I wouldn't want to sit in for that. And then we might go lower. I don't know. We'll have to see. But this was just some good practice.